Hi everyone, my name is Kelly Nyongkaiti and my match number is 271560. So today I will try to present the comprehensive case 1 start from question 8 until question 16 together with my member who are Choy Chian Yi, Wen Wei, Choy Chian Yi and Ooi Kim Teik. So to determine the near realizable NRV for inventories of Terra PhD as at 31st December 2019, we will list out the inventory cost NRV, value of inventory and write down amount in a table. So for the inventory, which are the Honda motor, Suzuki motor, and the Yamaha motor. So from the cost is provided in the question, and for the NRV is the difference of the sales price and the selling price. So to determine the value of inventory, so we need to compare the cost and the NRV, which are the lower, and that is the value of inventory. So the write down amount is the difference of cost and the value of inventory. So from that we can know that the value of inventory is 3,130,000 ringgit Malaysia. So that's my present, and I will pass to my next member. Thank you.
Good day to doctor and everyone. My name is Choy Chian Yi and my metric number is 270211. Now I will discuss on question 9 in comprehensive case 1, which is to determine the proper balance in allowance to reduce inventory to an RV account at 31st December 2019. The allowance on 31st December 2019 is we use the total cost minus total NRV and we get this amount, which is 320,000 ringgit. Because of the company applies the loss method and use an allowance account to record for the write down of the inventory to NRV. So we debit loss of inventory account and credit allowance to reduce inventory to NRV by 320,000 ringgit. Now we proceed to question 10. For the financial year end 2019, determine the amount of the gain or loss that will be recorded due to the change in allowance to reduce inventory and NRV. Prepare the related journal entry. So we need to adjust the allowance account. In previously, the credit balance of allowance account is 250,000 ringgit. But in current year, we just need the current amount, which is 320,000 ringgit. So we need to increase the amount by credit the allowance to reduce inventory to NRV account by 70,000 ringgit and debit the loss of inventory account by 70,000 ringgit. That's all from me. Thank you.
Good day, madam. My name is Choy Chian Yi and my matrix number is 271130. For question 11A, what is net realizable value NRV? According to MFRS 102 para 6, the net realizable value is defined as the estimated selling price in this ordinary cost of a business less the estimated cost of completion and the estimated cost necessary to make the sales. NRV could be referred as the net proceeds received from the sales of inventory. 11B. Explain the rationale for the use of LCNRV rules it applies to inventory. MFRS 102 prescribes that the value should be stated as the lower between its cost and NRV. However, in certain circumstances, the cost of inventory may not be recoverable if those inventory are damaged, if they have become wholly or partially obsolete, or if their selling price have declined. Therefore, in this situation, it is possible that the NRV would be lower than its cost. If this happens, the values of inventory needs to be written down to its NRV, and this is how LCNRV rules apply to inventory. Question 13. Identify subsequent measurement model adopted by Tara Berhad to account for the pattern. Justify your answer. The subsequent measurement model adopted by Tara Berhad to account for the pattern is revaluation model because the company revalued the pattern as at 6.5 million instead of using carrying amount in year 2018. Also in year 2019, the pattern have been revalued to market value of more 4 million due to new competition in the market. Next, I will pass to next presenter Kim to explain question 14.
Good afternoon, Doctor and everyone. My name is Ooi Kim Teik. My case number is 270246. I am from Group 2. Right now, I'm going to present you question 14 for comprehensive case 1. Based on the information given, we can see that company purchased patent on 8 million on 1st January 2016. Then it revalued the patent to 6.5 million on 31st December. So now we have to find out how much amortization for each year. We will take 8 million divided by 8 years. Then we will get 1 million amortization for each year. Okay. Since we got everything ready, now we can find the carrying amount in 31st December 2018. We will take 8 million minus accumulated amortization for 3 years, which is 1 million times 3 years. Then you will get 3 million. So we take 8 million minus 3 million, we will get 5 million. Okay. Now we see that the revalued amount, which is 6.5 million, more than the carried amount 5 million. So there will be gain on revaluation. Okay. The difference is 6.5 million minus 5 million, you will get 1.5 million. That is your gain in revaluation for 31st December 2018. So for 31st December 2018, there will be 2 journal entries. The first journal entry will be debit your amortization expense, credit your accumulated amortization pattern for 1 billion. Then the second journal entry will be debit your accumulated amortization pattern for 1 million. Then you will debit your pattern for 500,000. Then you will credit your unrealized gain revaluation pattern for 1.5 million. Okay. The reason we debit pattern 500,000 is because the value increased. Okay. The pattern value from 5 million increased to 6.5 million. So the first 500,000 we will record it as debit pattern. Okay, it is also stated that the pattern was revalued to 4 million on 31st December 2019. Okay, let us assume that there is no annual revaluation on 2018. So the carrying amount pattern on 31 December 2019 will be 8 million minus accumulated amortization for 4 years, which is 1 million times 4 years, you will get 4 million. Then 8 million minus 4 million, you will get 4 million carrying amount pattern on 31st December 2019. Okay. The revaluation amount is same as carrying amount, which is 4 million. So there will be no impairment loss. Okay, next thing we will do is we will determine the gain on revaluation or loss on revaluation. First, we have to find out the amortization for the new revaluation pattern. We will take 6.5 million divided by 3 year remaining life. We will get 2,166,667. Next, we will find the revaluation reserve. We will take the new amortization, which is 2,166,667 minus 1 million, which is the old amortization amount. Then we will get 1,166,667. Finally, we will find the carrying amount pattern on 31st December 2019. We will take 6.5 million minus the amortization amount, which is 2,166,667. We will get 4,333,333. Okay, here we can see that our carrying amount, which is 4,333,333, more than the revaluation amount, which is 4 million. So the difference will be 333,333. Okay, this amount represents unrealized loss or revaluation on pattern, or we will debit our unrealized gain or revaluation on pattern. So there will be 3 journal entry for 31st December 2019. The first journal entry will be we will debit your amortization expense, credit accumulated amortization pattern for 2,166,667. Okay, then for the second journal entry will be debit your revaluation reserve and credit your return earning for 1,166,667. Okay, for the third journal entry, you will debit your accumulated amortization pattern for 2,166,667. Then you also will debit your unrealized gain on revaluation building, which is 333,333. Okay, then you will credit your pattern for 2.5 million. Okay, the reason why we credit pattern for 2.5 million is because there is a revaluation downward from 6.5 million to 4 million. So the difference is 2.5 million. Okay, that's all from me. Thank you.
Good day, madam. I am Wen Wei, metric number 271639. Today, I'm here to share about the journal entry necessary to record the cost of customer list and amortization expense in 2017 and 2018. Based on the information given, it shows that the cost for customer list is 680,000. 40% of the estimated future benefit from the cost will flow into the company in 2017, which is 272,000. The amortization expense in 2017 can be calculated by using the amount 272,000 multiplied with 9/12, and we will get the amortization expense 204,000. To record the purchase on customer list, we will debit the intangible asset customer list account and credit the cash account with the amount 272,000. To record the amortization expense on customer list, we will debit the amortization expense account and credit the accumulated amortization customer list account with the amount 204,000. Furthermore, the information also tells us about that 60% of the cost, which is 408,000, will generate evenly in the next 3 years. To calculate the cost for customer list in 1 year, we can use the amount 480,000 divided by 3, and we will get the cost 136,000. The amortization expense can be calculated by separate into two parts. The first part is from the 1st of the January until the 31st of the March. This period is still considered as the first year of the customer list, so we can use the amount 272,000 multiplied with 3/12, and we will get the expense 68,000. The second part is start from the 1st of the April until the 31st December. This period is considered as the new year for the custom list, so we can use the amount 136,000 multiplied with 9/12, and we will get the amount 102,000. The total amortization expense in 2018 is 170,000. To record the purchase on customer list, we will debit the intangible asset customer list account and credit the cash account with the amount 136,000. To record the amortization expense on customer list during the year 2018, we will debit the amortization expense account and credit the accumulated amortization customer list account with the amount 170,000. Now I would like to discuss about the journal entry necessary for the brand in 2018 and 2019. Also discuss whether the Terra Berhad should record the amortization expense in 2018 and 2019. Based on the question, we know that the cost of legal title of brand is 500,000 with 5-year legal life. To record the purchase a legal title of brand, we debit the legal title of brand account and credit the cash account with the amount 500,000. The question also tells us about that the company will lose 30% of the market share, which is 150,000 in 2019. This 150,000 belongs to the loss on impairment. To record the impairment loss, we debit the loss on impairment account and credit the accumulated impairment account with the amount 150,000. The company should not recognize the amortization expense in 2018 and 2019 because the legal title of brand belongs to the intangible with indefinite useful life. Therefore, no amortization expense will be recognized but must test its impairment at least annually and record the impairment loss. That's all for our group presentation. Thank you.